Our grand RSI-based setup on the 2-day chart that I was rather excited about got stopped out at a meek loss of 3.5%. This was due to the wick stop loss being triggered, which clearly saved ourselves from a minor disaster. What then is the overall technical status in Bitcoin? Well, the stopped out RSI signals sure have altered the scene. But before that, not financial advice, and please like and share and subscribe. Starting off on the weekly chart, the mid RSI buy signal will remain intact if only Bitcoin can close the week at around $33,000 or more, which should be more than doable. Such event would in fact count for a double signal, a repeat if you will. Clearly, we'd love to see a further confirmation on the daily chart too if possible, and such would look something like this. But if we put the RSI aside for a moment, the picture is looking rather interesting regardless. First and foremost, we can debate whether Bitcoin is trading within a horizontal channel or if it's in fact trading within an expanding triangle. Both should do the charm, yet I'm personally more inclined towards the latter, as in the expanding triangle, and mainly because of its perfect symmetry in terms of the support and resistance angles. And what makes this one extra remarkable is how I had it drawn out and shared on Long Life Trading's Twitter before it even tested this very level. With that said, I'm pretty certain most analysts and traders out there have looked at this horizontal line and acted upon it. That would explain this big wick in the shape of a fake out, all to punish the plethora of ABC traders out there who all got stuck with their hands in the cookie jar. By this token, if we can see an avalanche of stopped out shorts and some FOMOing in here, chances are we could be in for a continued aggressive pump. Furthermore, this rather extensive bullish hammer on the daily chart does indeed impress, and especially so as the price found good support in the midst of the commotion at the very EMA 200 line on the weekly chart, upon which the price reacted upon it right away. Since its very spike bottom the other day, Bitcoin's price is up by near 20% at most. Given the extreme fear sentiment as of lately, in combination with this hammer, the expanding triangle, and the steep price declines in Bitcoin, all make me comfortable in being long. With that said, my positions have stopped out twice already, but I'm back on the horse as upside potentials remain clearly attractive. Based on this possibly near prophetic December episode, in which our thesis was that the markets had now likely topped out for decades to follow, it does apply to Bitcoin too. I will proceed with caution with any price pump to follow, for unless we're giving a strong RSI buy, I will begin to thread carefully in the mid $40,000 range. Yet I'll still keep a decent chunk in case this D-wave were to play out in full. It'd be a free roll of sorts. If, however, the price fails to break the March pivotal top, then we'd have a series of lower lows which could set the stage for some nastiness to follow. Yet if we look at the last year's price movements, we can tell that they've been accompanied by very weak trading volumes. And this in turn further supports the complex fourth wave correction thesis, in which this here is and remains an ABCDE correction. I've recently come across some interesting theories regarding that the prospect B wave as of now is in fact the end of a 5-wave impulse. And this would hold validity if the C wave dump would have picked up in trading volumes, as the A wave of an ABC typically comes with significantly increased trading volume, as it's the very end of a distribution. Although at this point we have seen nothing of the kind, and hence this 1, 2, 3, 4, 5 thesis is automatically disqualified. And until we know more, there is a good probability that this ABCDE fourth wave correction, a complex one, is still in play prior to making it for a final fifth move pump. Sure, I'm fully aware that this contradicts the topping out of the markets that I just went on about, but hey ho, perhaps Bitcoin is one of those few sole exceptions, although I don't expect it to be so. Regardless of what, the first major step to knowing that is for Bitcoin to take out the March pivot top at around $47,000 to $48,000. And to remain above with consistency. We don't want to see a major spike just to see the price turn around and plunge down the abyss again. Now, the main thing that speaks in favor of Bitcoin being ready on the upside for this primary cycle, and secular cycle too for that matter, is the fact that all Bitcoin mining companies on the US Nasdaq have all taken some serious blows to their performances. Marathon bottomed out at a minus 90% drop from its recent November peak. Hut 8 dropped by minus 86%, and Riot is down by minus 92% at most. And to anyone who's been around the market block for more than a primary cycle, you may be awfully aware of the unlikeliness in a speedy recovery after such dramatic blows. Frankly speaking, they don't happen. And this in turn is in fact a big warning sign for Bitcoin's inability to recover to new all-time highs. Now, regardless of what, the chances still favor some sort of a temporary rally here. Yet if the price ultimately breaks below and closes below the EMA 200 on the weekly chart, then we'll do wisely in bracing for impact. We might of course see a minor relief rally to trick the final bulls, but such would likely not amount to much more than a mere kiss and eye off the horizon of $30,000 level at most. With that said, I'm not bearish just yet. Instead, this is precisely the type of setup I've been looking for, and now I've acted upon it by allocating funds into Marathon. And what's left for now is, as always, to play the waiting game.